Homeownership is stressful, guys. I feel like I've spent so much time trying new things that are way outside of my elements, too much time and money at Home Depot, and might have almost accidentally burned down my brand new home the first weekend I owned it. Yeah, anytime you're doing electrical work outside of your element, definitely hire someone. All right, so all kidding aside, for those new around here, my name is Nick Allen. I'm a tech consultant based out of New York City, and it's probably obvious by now, but I recently moved into my first ever home that is actually mine. It's been a ton of fun getting to move into a place that we can call our own and really make it feel like our own. I've really been out of my element recently with a lot of new, stuff around the house, whether it's, trying electrical work for the first time, painting, getting things all neat and tidy and ready for us to move in. It's been a ton of fun, and one of the reasons why I am talking to you all today is because I really wanted to spend some time for those of you who may be first-time home buyers, what that process looks like, and the things that you as a first-time home buyer really need to be thinking about and should have at the top of mind as you're going through that process. One of the reasons why I wanted to make this video was because when my wife and I were starting to think about what the process would be for purchasing a home, and if we did in fact want to go about that, we really had no idea once we came to the conclusion that yes, we did want to purchase a home, what we needed to do and things that we needed to think about. There were a lot of YouTube videos and blog articles and family members that we spoke to ultimately kind of give us all the information that we needed to come to the conclusion that yes, we did in fact want to purchase a home. But it would have been really awesome to have a single video that could help us, at least from a high level, understand what would be involved in that process. So that's why I wanted to put this together today, and really hope that this could be useful for you and your loved ones or other people in your life as you go through the process of thinking about if homeownership is something that you would like to embark upon. I wanted to break this video down into three main sections where each section is going to be a different question or set of questions that you should be asking yourself as you start to think about if homeownership or purchasing a new home is something that is right for you in your current situation. The first question or set of questions that are going to be important to ask yourself is, how much money do you actually have saved up? Obviously, there's a lot underneath that can be thought about in terms of what's saved up and what level of down payment you're going to be putting down, but we'll be talking a little bit more about that. The second question or set of questions, and ultimately this piggybacks off of that first question, is of that money that's saved up, how much do you have allocated towards a down payment? And after the down payment has been made, how much money do you have left over for additional expenses? There's a lot of other expenses that I wanted to break out there, and we'll talk about those more, but that's the second question. And the third question is, how long do you see yourself living in whatever area of the country that you ultimately choose or are thinking about moving to and purchasing a home in? There's a lot to unpack around all of these different things, so we'll go ahead and break all those down, and really excited to jump into those. So the first question of asking yourself how much money you actually have saved up to be able to purchase a home ultimately starts with, what's your down payment going to be? There's a lot of chatter or just general thought around the fact that putting 20% down on a home is, the best possible solution and really the only way to purchase a home. And that is not at all the case. While that might have been the case, several decades ago, nowadays there are tons of options to actually purchase a home. I'm kind of making up this stat right now, and I think it's relatively in the same ballpark, but something around 70% of first-time home buyers don't actually put 20% down. All right, I have no idea where I pulled that 70% stat from, but I did just look this up, and the first-time home buyer on average puts down roughly 7% on their first home. So I'll just leave it at that. Back to the video. On their first home. And the reason for that is because there's lots of incentives, both at the federal level as well as an individual state level, that allow first-time home buyers to get away with lower down payments or special terms of their mortgage that are very specific to first-time home buyers. Now, I'm not going to go into details on what these could potentially look like because they're very much going to depend on your current income requirements as well as what different states have and different programs that states have around this. But there's a lot of scenarios where you can absolutely, and in most scenarios for first-time homebuyers, where you do not put down 30%. The only caveat to this is if you're looking to purchase in a market that is much more competitive than anywhere else in the country. Areas like New York City or other large markets where there's a lot of competition, it's very common to really need to actually have 20% put down on whatever home you purchase, because that's going to be the most competitive. And you may also run into scenarios in these larger cities where competition is high and maybe there's a lot more income that home buyers have to be able to put towards their home purchases, where you may actually find scenarios where people are putting more than 20% down or put all cash offers on homes, which is absolutely crazy for a lot of us who are first-time home buyers, but there are people out there that will look to do those types of things. So just things to consider based off of where you're looking to be. If, however, you do choose to go the route of paying less than 20% on your loan, there is something additional that you will be charged called the PMI. What PMI stands for is private mortgage interest, and it's essentially an insurance policy that the lender or person that you're receiving your mortgage from takes out on your loan to ensure that if for whatever reason you default on that loan and can no longer pay it, the bank is protected against any loss in you not being able to pay that loan. PMI is typically a small percentage of the total home value, typically something between 0.5 and 1.5% yearly that you have to pay to the bank to essentially insure your loan. And this is paid until the total equity that you have on your home reaches 20%. So let's say in a scenario where you're purchasing a $500,000 home and you choose to put down $80,000. Because that $80,000 is about $20,000 less than the threshold that you would meet in order to reach that 20% equity ownership, which would be $100,000. There is $20,000 in mortgage payments that you'll need to make until you reach that 20% equity. Until then, you'll essentially be responsible to pay the bank an additional 0.5 to 1.5% yearly on that loan until you reach 20% ownership in the loan. There's a lot of research that you're able to do online around more details around PMI, but that's just one thing that, as a first-time homebuyer who could potentially be looking to spend less than 20% on their down payment, just needs to factor into the cost of whatever home you're purchasing and what that monthly payment is going to be. So the second question to be asking yourself is, after you have actually saved all of this money and worked really hard to do so, how much of that money is going to be dedicated towards the down payment? And after the down payment has been made, how much money do you have left to cover any additional expenses? These expenses could be things like furniture for the new place, or paying movers, or doing different home improvement tasks that will inevitably be needed once you move in. And then probably most importantly is some sort of emergency fund. In the scenario where you purchase the home and for whatever reason you end up losing your primary source of income, having some sort of safety net to ensure that you're safe and can actually continue to pay that mortgage is going to be really important. Now, Andrew Jick, he's a financial YouTuber, has a ton of followers, way more popular than I am right now, actually describes the concept of, in the case where maybe you want to put down 20% on your home. So this is definitely not applicable to everyone, but I think is a really great framework just to think about, is the idea of the 30-33 rule. And what this is that you should, before purchasing a home, never spend more than 30% of your gross monthly household income on a mortgage payment. The second 30 in this equation is you should have roughly 30% of whatever home value you're looking to purchase saved up and ready to go before you actually make that purchase. And we'll dive into the reason for that shortly. And the third section of this equation is the 3. And that 3 being, you should never purchase a home that is more than 3 times your annual household income. Now, I think the best way to break this down is to look at this from the lens of an example. So let's say you as a home buyer have an annual gross household income, so it could be just yourself, it could be you and a spouse and a family, have a total gross household income of $120,000 a year. Of that $120,000, looking at the 3 part of that equation says that you should not purchase a home that is worth more than $360,000 a year. Now, if we look at the second part of that 30, which says that you should have roughly 30% of that home value saved up before you actually make the purchase, that means that you should have roughly $108,000 saved up before you actually make that down payment on the home, where roughly $72,000 of that is going to actually be put towards that 20% down payment, and the remainder will be for some sort of safety net or buffer that you have. And then lastly, if you follow all these rules to a T, that should ultimately bring you to a point where you're able to very comfortably spend less than $3,000 per month on your mortgage payment, which is, again, if you go back to that first 30%, is you should not spend more than 30% of your monthly gross income on your home mortgage payment. So backing out those two numbers to the first part of the equation that says you shouldn't spend more than 30% of your gross monthly household income on your mortgage payment, this should put you well under the threshold that defines you should be spending less than $3,000 per month on your mortgage payment. In the case of a $360,000 home, and based off of today's rates towards the end of March in 2021, should be spending roughly $1,500 per month on the actual mortgage payment, which is obviously well underneath that 30% monthly payment requirement. The reason that this is so important is when you think about purchasing a home, there are so many people that buy more home than they can actually afford. So staying within these bounds ensures that you're really within a home price range that is not going to make you what's called house poor and tie up all equity of your net worth into your home, which is obviously a illiquid asset and hard to actually get value out of until you sell. All right, and the third question or set of questions that you really need to be asking yourself are, one, where do you want to live? And two, do you see yourself living there for the short term, the medium term, or the long term? The reason these questions are really important is, first of all, obviously, you need to like where you're going to be living. There's a lot of considerations to have with where you live, whether it's proximity to work or family or friends, or generally just if you like that city or suburb or rural area. Is it somewhere that you're actually going to enjoy being? But really the underlying reason why I want to bring this up is because there are associated costs with not only purchasing a home on top of that down payment or any other additional costs that come with that, but there's also costs related to property taxes. And where you live strongly determines how much property taxes you pay in any given year. We, for example, recently moved to a city suburb of New Jersey, which is relatively close to downtown Manhattan, but is still in the state of New Jersey. And New Jersey has some of the highest property taxes in the country. With that, we had to have the consideration of, because of the fact that we know we're going to be spending a lot more on property taxes, we knew that the actual value of the home that we were purchasing was going to need to be less than what we could have afforded in a place that either had no property taxes, like Florida, for example, or just in general other states where property taxes may be closer to 1% or 1.5%. So these are all things that you need to consider when choosing where you actually want to be. Another set of costs for you to consider when purchasing a new home are what are called closing costs. These are fees that you typically have to pay to attorneys or to government agencies to issue titles, for example, and basically cover a lot of the administrative tasks that are required to actually underwrite a loan or run through the process of ensuring that everything is up to date with whatever documents you're submitting or the ultimate mortgage document that is going to get underwritten by the bank that you're working with. These closing costs can be anywhere from 2 to 2.5%. So when you're looking at a $500,000 home, like we talked about earlier, that $500,000 home will have roughly $10,000 in additional closing costs that you need to worry about as the new home buyer. So this is going to be on top of the costs that you have to pay for moving, the costs that you have to pay for actually putting the down payment on the home, and really anything else related to the purchase of the home. There are things like inspections that you have to get. There are some times where you have to pay concessions to the seller on maybe repairs that need to be made. So there's just another set of costs that you have to think about. Now, going back to the comment I made about asking yourself how long you actually want to be in that neighborhood or in that home that you've purchased is because there's also costs of actually reselling the home that you've purchased. The reason that it's important to think about this is because reselling a home is a lot more expensive than purchasing a home for the first time. We've talked about closing costs related to purchasing a home being around 2 to 2.5% for the average first-time home buyer, but that is a lot less than what you're actually going to have to pay when reselling that same home. So what you, as someone who had initially purchased a home for $500,000, need to be thinking about when you actually sell that home are the costs of purchasing. So when you initially purchased, you paid that 2.5% or $10,000 in closing costs. But there's also additional costs, or that 10% on the total home value or home sale value that you're going to need to pay when you actually sell that home. So when we look at break-even points on a $500,000 home that you purchased, you would essentially have to list that home and sell that home for something above around $565,000 in order to break even on that initial $500,000 purchase that you made. Now, this is a bit counterintuitive, right? Because you're selling the home at a gain technically, but at the end of the day, you're actually not necessarily making money even if you sell the home at that $565,000 point. And now, when you take a step back, there's a lot of other factors that are at play, like what inflation looks like and what interest rate you had on your loan, and a number of other factors that I'm not necessarily going to dive into here. But the main takeaway is that when you think about selling the home, and the reason why you actually need to think about how long you want to be in that home, is that the market needs to dictate how much that home is worth. And if the market has gone up or has gone down, that will determine how much you can list your home for. And obviously, in the ideal scenario, you want that home value to go up, which means that you're going to make some sort of profit on that home and can maybe purchase a larger home. But there's a lot to be thinking about when you ultimately purchase a home, because you need to be thinking down the line for 5, 10, 15, 30 years where you may actually want to sell that home. So I know I went through a ton of information over the last, I don't even know how long at this point, but I really hope that this was incredibly valuable for you and your loved ones as you think about potentially purchasing a new home. I know it's incredibly exciting, but can also be very daunting to do so. And I know for my wife and I, it was absolutely daunting and pretty scary, to be honest, when we actually pulled the trigger and decided that we wanted to purchase this home. But I couldn't think of something more fulfilling than owning your own property and being able to really make it your own. It has such a different feeling than renting or living somewhere that is not your own. And it's incredibly fun to just learn new things about home improvements or decorations or whatever else it might be. So I really wish you the best of luck. Feel free to drop a comment below about how you're thinking about your first home purchase, any questions that you might have, and I really wish you luck. But until then, happy hunting, happy researching, and we will talk soon.